So William O'Neill is a very famous name, at least in the US, in the world of stock trading and investing. He wrote the book uh, How to Make Money in Stocks. It's a red color book, fantastic book. I have read the book three times. That is when I decided to subscribe to MarketSmith India. As you can see here, this is MarketSmith India website. MarketSmith mainly is in US, but they also have office in India, and they also provide service to Indian stocks. And I am a premium member. I have a pro subscription with MarketSmith, and but I am not a promoter, or I'm not affiliated with MarketSmith in any way. I am just a normal user of MarketSmith. I use it to filter stocks in the Indian stock market because in India there are almost 5,000 stocks, and I wanted a software which could do that for me. And I think MarketSmith by far is the best that we have here in India. And as you can see here, I use a lot of filters. So the bread and butter, the hidden gems, and the promising gems filter, I have already discussed in a single video. It is on the homepage of my YouTube channel. If you don't find it on the homepage, maybe if I change the homepage, you might find it somewhere. Just type Indian stock market filter, you will find that. Then the best is another filter which I personally use. I have made a separate video on this as well. You will find it in the stock filters watch list. Today I want to discuss the O'Neill filter. Okay, the William O'Neill filter, the filter that William O'Neill used to use in the US market, and how the same can be applied to the Indian market. So the first filter is the earnings strength. Earnings strength should be good or great, which means the earnings strength or the EPS rating should be 80 or more. What this means is that any stock that qualifies under this criteria is doing better than 80% of stocks in the entire stock market. So, for example, let's say there is a company ABC. So, ABC has an earnings stability and earnings growth which is better than more than 80% of the stocks in the entire stock market. Okay, that's called as earning strength. Similarly, price strength should be good or great. So it should be, the rating should be more than 80. Again, the same concept applies. Let's say a stock ABC qualifies under this criteria. So the 52-week performance of the ABC stock, the past 52 weeks performance of ABC stock is better than more than 80% of all the stocks in the entire stock market. That is what this filter means. So, stocks having the best price strength, stocks having the best earnings stability and earnings growth. That is what is covered in these two filters. Then you have buyer demand. ABC represents a higher than average institutional demand. Group rank is 1 to 40. So there are total 197 industry groups or sectors as per MarketSmith. This is applicable to the entire world. In India, out of 197, if we look at the top 40 industry groups, they are the best. The best breakout stocks are going to come from the best industries, because the theory is that if the industry is doing well, the stocks in the industry are likely to do well. And then you have master score. This is like a composite rating considering all the points together. You only pick stocks where the master score is A and B. There are other factors apart from this which are considered in this master scoring. We don't have to get into the details of that, but just remember master score of A and B is important. So these are MarketSmith ratings. Then we come to the technical filters. So the price should be more than or equal to 20. This is basically to avoid penny stocks. Then the average rupee volume, the average daily volume should be more than a crore. So which is 10 million Indian currency, 10 million Indian rupees. This filter is basically to avoid illiquid stocks. And then the price should be near the 52-week high. If it is below the 52-week high, it should not be more than 15% below the 52-week high. So the basic theory or philosophy here is when the price is near its 52-week high, there is no overhead supply. Okay. So all of the supply has been already absorbed. Now there are only buyers in the market. So the closer the price is to the 52-week high, the better it is. Remember, these filters are applicable only to breakout stocks. We are not talking pullback stocks here. This is about breakout stocks. Then you have the fundamental filters. So return on equity, as per William O'Neill, should be more than 17% in a year. So that's a fabulous return on equity, by the way. So return on equity is basically how much net profit you are making on the average equity invested in the company. So basically, for every $100 that I put into the company for business, how much am I getting back in return? So 17% is the ideal number based on research done by William O'Neill years ago. Okay. So return on equity 17% or more is a criteria here. So as you can see, this filter is a very powerful filter. This takes the market ratings. This filter compares a particular stock to all the stocks in the entire stock market based on technical factors, based on fundamental factors, based on the liquidity of the stock, based on how close it is to the 52-week high, and also whether it's a penny stock or not, and also whether the stock actually makes money in its core operating business. Okay, so that's the William O'Neill filter which I use. If I apply this filter, let's see how many stocks come up. As you can see, 57 stocks show up. Wait, 18 stocks show up in this list. So these 18 stocks are out of the 4,939 stocks available in the stock market. So you can see this is the cream of the crop, okay, the best out of the best. So these are the stocks that are most likely to break out from their base if they are forming a base. If they are already moving up, there is no point getting into the stock. It is like jumping onto the moving train. That doesn't make any sense. So we have to wait till these stocks complete a proper base, which is there should be minimum 2 contractions in the base. There should be at least 10 candles in the base. These are my definitions, by the way. Some people buy it even if it completes 5 days or 6 days. But I have some strict definitions of the base, which you can see in some of my other videos. But moral of the story is I use multiple filters. So I have made one video to discuss the bread and butter filter, the hidden gems and the promising gems. I am discussing these 3 filters in a single video. The name of the video is the filters for Indian stock market. You can check it on my channel. In the playlist, I have this stock filters playlist. There you will find this video. Then the best filter, this is a filter. I have made a separate video for this. That also you will find in the stock filters. And this video also I will place in that playlist so that if at all you get confused, you want to come back and revise the concepts, you can anytime come back here. Remember, just for disclaimer, I am not associated with MarketSmith. I don't get paid any commission or anything from MarketSmith. I personally am a customer of MarketSmith. I use them. I pay them like 11 or 14,000 for every 2 years or something like that. I don't remember the exact price, but I'm a pro member of MarketSmith and I use this to filter stocks to find the best breakout ideas. So this is the filter that I am using. And I hope this video has been helpful for you. If you have any questions, please let me know. Thank you so much.